All good. So I'll give a few seconds because we have so much to cover. I also want to get going with this workshop. So for anyone who's here right now, who's already joined, welcome to a new workshop on the accountant quiz. Today it's on a subject we haven't covered so far on how to launch, manage, and ensure compliance for your DAO. There is different schools of thought when it comes to establishing a legal structure for a DAO. Some of them believe that it needs to have no legal structure. Some of them think the opposite. So today we'll be actually speaking with experts from Harris&Trotter and from Horizons Global to better understand how DAOs are doing it in the Cayman Islands. So today we'll be focusing on one specific jurisdiction. Briefly, the agenda, what we have today. I mean, you've seen it already. It's quite rich in terms of content. We'll go through like the setup, incorporation, governance, financing, and then operations, the day-to-day operations. I want it to be, instead of us having Q&As just at the end, I want it to be a little bit more dynamic. So if people have questions, if you guys have any questions, you can just type it in LinkedIn right now, and I'll take the questions after we go to the next topic. Also, I want to have like an introduction from the guest today. So maybe I'll ask William, if you want to go first from Harris&Trotter, if you could share us briefly what Harris&Trotter does, and also let us tell us a little bit more about your role there.
Sure, thanks, Umar. So yeah, Harris&Trotter, we are the largest professional services firm in Web3. We have over 500 clients across everything from financial audits, bookkeeping, accountancy, and my role with Louie here is leading our kind of foundation operations. And this kind of links into how we are supporting DAOs. So that's what we're talking about today.
Perfect.
Yeah, I can so introduce myself as well. I'm Louie. I work alongside Will at Harris&Trotter. We act for, as he said, over 500 crypto native companies, and I head up the DAO operations side with him.
Thanks for sharing, Louie. And lastly, we have Marc Piano joining from based in the Cayman Islands and working at Horizons Global.
Thank you very much, Umar, and William and Louie. Good to meet you both virtually. I'm Marc Piano, and I am one of the partners at Horizons Global. And our product is very simple. We provide professional, independent directorships for these foundation companies and other entities within these Web3 offshore structures. Bit of background as to how I got here. I was a lawyer for nearly 10 years, and 4 of that was in the Cayman Islands, where I played a key role in a large global offshore law firm's leading Web3 practice, working on over 100 different projects, not just executing on them, but also working with the projects, which were, some of them were top 30 already by market cap, others were seed and pre-seed, and helping them structure so that they could achieve their goals, get to where they needed to be on their various roadmaps, and then after they'd done their token launch, help to structure the governance in relation to the legal structure, and then provide ongoing legal counsel advice as external counsel to those structures. So deep knowledge in this space, been in this space since about 2016, and bringing that perspective and experience, not just on the structuring and transactional side, but also on the strategy and offshore multi-jurisdictional perspective to this governance role. So great to be on here, and thank you for inviting me. Looking forward to this.
Perfect. Thanks for sharing, Marc. And I just wrote a comment in LinkedIn. If everyone can hear us fine. If you can, could you please type yes or just type something? Before we start, very quickly about the accountant quiz. If it's the first time you are hearing about this brand, the accountant quiz, it is quite a funny name maybe at first. So what is the accountant quiz? It's basically a platform to help accountants learn crypto accounting. So basically they can hire it at companies using digital assets. Even though it's called the accountant quiz, we're not telling accountant to quit. We are rather telling accountants to upskill themselves with the blockchain and understand how to do crypto bookkeeping and how to run a business basically using crypto. So with the Accountant Quits, we've launched a course. It's a 7-week course. And I believe if you scan the QR code right now, it will bring you to the course page. There's also a podcast. There's various resources on how you can learn basically crypto accounting. So with that, the way I think we're good to go. And thanks to everyone for replying. Everyone can hear us. Great. So the first question, and again, if you're just joining right now, at any point when you have any questions, because we have 4 different topics for today and the session should last, we are 5 minutes and it should last another 55 minutes. So at any time, if you have any questions, please do write them in the comments area and I will take those. So the first question, which is really for Marc, but Will and Louis, you can feel free to interject. Is on incorporation. So like I said, there's different schools of thought when thinking about the legal structure for a DAO. And usually, like a lot of DAOs, there's a let's say a pre-DAO stage where the founders are working to launch the project smart contracts. They've tested the product. They have rallied the community behind. And then the next stage is about governance, is about thinking of how members will vote, and later down the line, should we have a legal structure? So like I said, we'll be focusing on the Cayman Islands. So Marc, what I want to ask you is, for those projects who are thinking to have some form of legal structure for their DAO, could you walk us through this setup, how it works in the Cayman Island, and maybe why should one choose the Cayman Islands?
Sure, there's a lot to cover here, and I'll try to be as succinct as possible. I mean, browsing through the attendee list, there's a good degree of sophistication and experience amongst the attendees here, but I still think it's helpful to start with an overview as to what a foundation company exactly is and why it's so popular, and then we can go through the setup process as part of that discussion. So the Foundation Companies Act came into the Cayman Islands in 2017, quite fortuitous timing. It was originally meant to be a corporate trust vehicle and was a corporate vehicle which was introduced as part of the lobbying efforts by the private wealth sector here to have a vehicle that could have legal personality and hold assets, but was different to, but kind of similar operationally to, a trust arrangement. And hence the foundation company was born. So if you look at the Act, for those of you who are lawyers or interested in this in more detail, it sits on top of the main Companies Act, which is the main company legislation in the Cayman Islands. And it introduces some novel concepts, one of which is, by virtue of how the Act operates, it doesn't technically need to have members. Now, that can be a very beneficial draw for decentralized projects or projects relying on governance for their operations, because then you can have a corporate vehicle which doesn't owe duties to individual shareholders or corporate shareholders with individuals behind them who could control the company, who could take out money from it, who could change how the company operates. So that means you have a vehicle which can act pursuant to what we call non-charitable objects. Now, what are non-charitable objects? They are set out in the Memorandum of Association of the foundation company. There's broad scope as to what they could be, and the company can only act to further those objects. So they do need to be quite carefully drawn. There's a bit of a balance between being too precise and specific and hamstringing the company's ability to act as a project evolves, but also being far too broad that it's almost uncertain, and if there's almost not even a real link between the foundation company and the project it purports to support. And you have to look at some of the mechanics and governance mechanisms on the DAO side to recognize the foundation or give it some sort of standing within the token holder community. So with no members, you then have to work out who controls the company. And this is where the Foundations Companies Act requires a supervisor who, in the absence of members, will exercise the voting rights of the company. Now, those voting rights are derived from the Articles of Association, and they can be as broad or as limited as you may require. There are certain things that a supervisor will need to do, just like an ordinary member. So voting to change the company name is something under the Companies Act, requires a special resolution, and certain other things as well, such as changing the memorandum and articles. However, beyond that, appointing and removing directors, any other governance functions in connection with the company, the supervisor could do that, the directors could, or you could build in some governance provisions which are recognized under bylaws, which are a separate set of documents referenced in the M&A, but also bind the director, supervisor, and potential other stakeholders. If you don't have members, people have asked in the past what a beneficiary is. A beneficiary is someone who can be named as such under the foundation company's articles and memorandum. If you do put beneficiaries in, there's an additional set of considerations that need to be taken into account there, and you do need good legal advice because there are implications on making distributions out to beneficiaries, particularly if you're trying to include a class of token holders as beneficiaries. There's a lot of nuance there, and it's very important that every project gets their own specific legal advice from experienced legal counsel when thinking of using a foundation company, because it's one of the few corporate vehicles in the world that has corporate personality but no membership requirement. It has become an incredibly popular vehicle for this precise reason, that it can be used for supporting decentralized projects. At a minimum, because it was a corporate trust vehicle and because of some of the considerations that come into play when you don't have members, there are certain requirements under the Companies Act for certain positions to be filled. So you do need a supervisor if you don't have members. You don't have to have a founder. You don't have to have beneficiaries. But if you're not going to have members, you need a supervisor. You need at least one director, and you need a secretary. And the secretary has to be licensed by the Cayman Islands Monetary Authority, which is the Cayman Islands Financial Services Regulator, for a specific type of license, and that's set out in the Foundation Companies Act. That's the minimum set of office holders that you need. You don't need local directors under law, and you don't need a DAO management company under law, but they can be good ideas depending on the project and depending on what the foundation's activities are going to be. And I'm sure the Harris&Trotter team will go into that in more detail. So how do you set one of these up? Usually you go to a law firm or you approach us, Horizons Global, and we can help facilitate that process. I personally typically recommend that the director and the supervisor are different people. And there's a very specific reason for that under the Foundation Companies Act. If the foundation company has a director or a supervisor that's unable to fulfill their duties or is being accused of not doing so, you have what's called a director or supervisor difficulty, which, if it can't be resolved under the constitutional documents, means that foundation company has to go to the court. That's a process that can easily be avoided by, one, having separate directors and supervisors, and two, having clear arrangements in the memorandum and articles for resolving any such potential disputes. So you go to a law firm or us to help set these up, and then you ensure that you have good legal counsel, both for whichever jurisdiction your laboratory company or your labs co is based in, and offshore, to ensure that the structure itself is well set up, that you understand what it is doing, and most importantly, what it's not doing, and also which other entities in that structure will undertake certain functions and the funds flow between them. You'll also ensure that you have good legal counsel for your onshore company to ensure that its contractual interactions with the foundation company and any payments it receives or any advice it gives is going to ensure you stay within the bounds of relevant laws, regulation, and taxation considerations in that labs co's own jurisdiction. So that's a lot there. Fully appreciate I've kind of done a lot of stuff on people there. That's kind of the high level overview of what a foundation company is, how it works, why it's popular, why Cayman is one of the few jurisdictions with this, the benefits of not having members. There are other jurisdictions that claim to have foundations. If you're looking at those jurisdictions, look very, very carefully at what does that mean in practice. Are there members anywhere near this? Do the tokens represent membership interest in that company? If so, probably a security. So you've got to look at that stuff carefully as well. This is why Cayman has been the leading jurisdiction for about 5 years now, with home to many, many hundreds of foundation company projects, with a very sophisticated and mature service provider base who have grown this space with a consideration for compliance, with one eye to the future, and deep technical and sector knowledge and expertise. So I'll stop there and happy to answer any additional questions or go into more detail.
Perfect. Thanks for sharing. One of the follow-up questions I had, and that was a lot to take, but one of the follow-up questions I had is on the role of, if you could maybe go a little bit deeper on the roles of each of these parties, like, for example, the director, the supervisor, and the DAO operator in the context of running this DAO foundation in the Cayman Islands.
Sure. So who does what effectively? All right. So a foundation company gets incorporated. It's going to have some memorandum objects of supporting XYZ project, or that project and its governance, or the adoption and ecosystem, however it's drawn, depending on what you want that foundation to actually do. Then you have the director appointed, because you need to incorporate with the director. You need to think very carefully about who that director will be, and there's several reasons for that. And this is where I put my independent professional director hat on and give you a list of things to consider, which may not lead to conversations with the Horizons Global. It may lead to conversation with other service providers, or even none at all, and certain members of the team are directors. You need to think about the responsibility of that director. They're going to take on fiduciary duties to the foundation company. So if they're a member of a labs team as well, or a project founder, they need to understand they're going to have duties potentially enforceable against them to advance the foundation company's best interests. The foundation company's best interests are advanced by acting to further the objects or its purpose or its principal objects. So this is why those objects need to be drawn quite carefully, but also why we often see labs teams not having members of a labs team as directors of the foundation. They might resign from a labs team and then be appointed separately. And then at least that way, they've got the background knowledge and the prior relationship with the labs company that's going to be providing services and advice to the foundation company. Independent directors, especially if they're based in the Cayman Islands, can offer that mind and management being based offshore in the jurisdiction of incorporation of the foundation. And with the experience that the service providers who provide director services have, you can ensure that they've seen hundreds of these projects, they understand what the typical arrangements are, which entities enter into the appropriate agreements, and what commercial agreements tend to look like. They're neither your lawyers nor your BD nor your commercial team, so they will rely on the other people involved in providing services to the foundation or otherwise engaged or employed by the foundation to bring these agreements to them and check them. But they do have an additional pair of eyes because ultimately they're the ones signing it and taking that responsibility. So the directors have a large part to play. It's important that the teams, in consultation with legal counsel, have a discussion about who that director should be. It's a very important role, if nothing else, because initially, at least, the foundation company is going to work closely with the labs team. They need to get on well. They need to trust that director. They need to believe that that director is going to be responsive when it's needed, and they need to have a good line of communication. There can be agreed cadence calls. There could be Telegram groups. It all depends on the service provider and the director. It's typically a flat annual fee because you're paying for the director's expertise and experience. And do read the director service agreement carefully to ensure that any other costs are very clearly laid out, that you understand what they are, and that you accept them, or if you don't, negotiate on them. So that's the director role. And then I'm going to talk more about the supervisor role now in terms of what they do. Because they exercise the voting rights of the members, even though there are no members, it can be quite an important check and balance on the position of the director. But because the directors and the supervisors derive their powers entirely from the foundation company's memorandum and articles of association, you have to check of what the role of the supervisor is. It could be quite limited, or it could be quite extensive and a more active role than some other foundation companies' articles may have them doing. So it's important to understand that the supervisor is effectively the vote caster in these foundations. And each project needs to work with legal counsel and understand what that means and what's beneficial to their potential governance structure. And when I say governance structure, I don't mean within the foundation company itself alone. I also mean its interaction with DAO governance, on-chain governance. So there's always an interplay there. It can sometimes be an iterative process. You'll incorporate the foundation company with relatively standard memorandum and articles to get it up and running. And then before you implement the governance process and go and launch the DAO, then you adjust and update the memorandum and articles so it reflects any bylaws that might be required, any kind of notification mechanisms for appointment of directors or supervisors, any councils and so on. Speaking of councils, they can either be separate to the foundation or they can be a committee of the foundation, which has certain requirements under that foundation company's memorandum and articles as well. Each project is different. The secretary does a key function, which is important for structuring of funds flow considerations, which is signing a Section 17 notice. Now, what is a Section 17 notice? It is a very specific requirement for foundation companies that if it is going to receive assets gratuitously, i.e. not in consideration of issue of shares, grants, donations, anything like that, the secretary needs to sign a certificate confirming that there appears to be no objection under Cayman anti-money laundering, terrorist financing, proliferation financing laws to receipt of those assets. What that means in practice is the secretary is putting their license on the line to sign that certificate. And there's certain consequences if they don't give that certificate or if they give that for the wrong reasons. Now, what that can mean is that certain payments into the foundation, especially if they've come from any kind of DeFi protocol, which may or may not have had KYC and sanctions checks run on the participants, probably can't go into the foundation because the standard of inquiry is high and the secretary needs to be able to stand behind their license and give that certification. We sometimes see those go into subsidiaries of the foundation, which can then be distributed up to the foundation in the ordinary course because it's an intragroup payment or distribution. But again, there's still a standard of inquiry. No matter what these companies do, these companies, like every other company in Cayman, the BVI and elsewhere, have local legislation ensuring that they don't facilitate money laundering. So there's always a delicate balance there between allowing these foundation companies and their subsidiaries to operate, but ensuring compliance with general laws and regulations that apply to all companies, whether they're in crypto or not. So I've covered the secretary, covered the supervisor, covered the directors. We don't typically see foundation companies with beneficiaries. That's very much a product of them being corporate trust vehicles. We have seen for a little while trying to nominate Cayman entities or charities or non-profits as beneficiaries, but some of those didn't go ahead, and there was some complexity around that as well. So again, it needs to be taken on a case-by-case basis. So that's the key stakeholders and roles in this. The role of token holders in the foundation needs to be very carefully considered, because if at any point they potentially have the ability to appoint and remove directors or have other forms of specific control over the foundation by other means, they could be deemed as beneficial owners, which would have several implications, not least because they have to maintain a register of beneficial owners at foundation company level, but also that might have some implications for the tax consequences of those holders of those tokens. And it becomes a bit of a reporting and recording nightmare. So again, all of this flexibility is great, but it also means you need to have very careful consideration as to what exactly this foundation company will do, its relationship with governance, the roles that need to be held and who's going to hold them, and bringing all that together with the wider vision of the project. Because bear in mind, these foundation companies can hold very significant treasury amounts, tens or hundreds of millions in some cases, and they don't belong to the DAO, they belong to the foundation. So the foundation's relationship with the DAO is very, very important. And Harris&Trotter can probably speak to that in more detail, because I think I've probably melted a few brains by now, so I'll stop there.
Yeah, thanks for sharing, Marc. There's a fourth party referred to as the DAO Operator, which I understand would be Harris&Trotter, taking care of the operations, accounting, financing. I would ask Will or Louie if you could just further elaborate on the role of the DAO Operator. You've already explained the role of the supervisor, and then later we'll dive a little bit more on the requirements for filing like accounts or if they have other tax commitments in the Cayman Islands. But first, could you just start with like providing an overview of the role of the DAO Operator?
Yeah, I think the role of the DAO Operator can be quite a wide scope, and it very much depends on what stage the foundation or DAO is at. So we work with a lot of foundations and DAOs, and some of them are completely new entities. They've just set up a legal structure. They haven't TGE'd a token yet, and they're looking for someone to come in and completely set up everything from start to finish from that financial and accounting aspect. So that would be a setup of bank accounts, it'd be set up of wallet setup and management, working with multi-sig wallet creation, wallet custody solutions as well, doing all of their bookkeeping and management accounts preparation. And then you see it go through straight to TGE as well. If you have a token generation event, the DAO Operator can help with maintaining those relationships with market makers, with centralized exchanges, and helping them TGE. You would typically see the DAO Operator actually TGE as well on island or in the jurisdiction that they're TGEing in. And then it can go fully through to operating the DAO and operating the foundation as well, whether that's just ongoing financial and accounting work, or whether that's much more high-level DAO stuff like governance proposals, reviewing of grants and contracts, developing and reviewing proposals, as well as all the payment processing as well for the DAO and foundation.
Perfect. I'm hearing my echo. I'm seeing where this is coming from.
It might be us. We can just...
Okay, perfect. So one of the follow-up questions I had, so in 2021, we had like a DAO moment. Everyone was launching a DAO, but you guys, you recently launched this new service line called DAO Better. And so Louie and Will, you guys are leading this initiative. I want to ask you why Harris&Trotter even decided to enter this area of the market, and how many DAOs at the moment or how many new projects in general are you seeing structuring as a DAO foundation in the Cayman Islands? What's like the trend at the moment?
Yeah, I think the reason we entered this part of the market is probably twofold. The first one being, as Will said earlier, we're the largest digital asset service provider in the world, professional service provider in the world. We work with over 500 crypto native companies. We've been in the digital asset industry since 2017. And this is what we specialize in. This is what we do every single day. We're a team of 50 people, all qualified accountants. So I think that is the main reason we entered this part of the market, because we have the expertise and this is what we specialize in. The second reason is because we saw a problem within this part of the market, that there isn't enough independence between the directors of the foundation and DAOs and the operators. What we currently see in the market is that a lot of the directors will also be acting as operators, either through the same company, or they will have a related company, and the subsidiary to that company is acting as the operator, but essentially the director sits on both boards, so it is very much a related party transaction. And what we were seeing is that a lot of these operators were charging the DAOs and foundations very, very high fees, and not necessarily at arm's length transactions. And because the directors would operate on both these companies, they were approving these fees. And in the traditional world, this wouldn't really be permissible. So we saw that it was a big threat to independence. So we entered the market as the world's leading digital asset professional services provider, and said that the directors and operators should be completely separate and completely independent. The directors should be able to fire the operators if they need be, and the operators shouldn't be charging these extortionate fees to operate the DAO.
Just before we go on to the question, I just want to add to that. As an independent director, Mike says, my business partner says, we're fiercely independent. I say I'm annoyingly independent because I use absolutely everybody, whether it's legal counsel, DAO management companies, anyone else. I do think Harris&Trotter's point here is an important one, and I think it's one which more people should be alive to the defense of some of the DAO management companies and director services that do have that alignment. I think when you have more than one director on the board, it becomes easier to manage that potential conflict. You can have recusal mechanisms in place. You can have certain carve-outs, and those interests should very much be declared. So I think where you have a sole director, that is a heightened risk, but it can be addressed by having more directors on the board as the project grows and expands. So I just want to add that it's not fatal, but it is something projects should be aware of, especially in the initial stages when thinking about who to engage and the relationships there between them.
Perfect. Thanks for adding, Marc. There's two questions right now from the audience, which we can take before moving on to the next topic. The first one is from Tina. Tina is asking if one of you could elaborate on what exactly is required to establish a bank account in Cayman or BVI, and if local representation is required.
Sure, I can speak to that initially and then throw to Harris&Trotter from their perspective. First, you don't need to have a Cayman or BVI bank account. You can have a Cayman or BVI company banked anywhere in the world. And if we look at the funds industry, which is by far one of the largest financial pillars in Cayman, the BVI, and many other offshore jurisdictions, a lot of the local banks don't bank those funds. It's usually large international banks, banks with specialisms in fund clients, particularly some of those banks then like to provide fund financing to those funds. There's also a more restricted appetite towards crypto-based businesses for a lot of banks in Cayman BVI. That's not the case for all of them. There's TNet Bank, which has recently opened up, and I understand they bank some crypto clients. There's also potentially Fund Bank, Bank of Asia, and BVI. But in each case, it takes a while to open these bank accounts, not least because if you're onboarding a foundation company, either as the account holder or the parent of a BVI or other company that's opening a bank account, there can be an extensive KYC process involved. You have to KYC the directors, the supervisors, the foundation company itself. There's no members. Oh, wait, why are there no members? And going through that process. More and more of these banks that do bank foundation companies are becoming familiar with the structures now, so it's becoming a little bit less painful, but it is still measured in weeks to open these bank accounts. And I think if you have this conversation with most DAO management companies or even law firms, they'll tell you pretty much the same thing, whether that bank is based in Cayman or the BVI or it's based elsewhere. Now, local representation isn't strictly required because ultimately they're either going to bank the company or not based on the bank's own internal criteria. So it really does depend on the conversation with each bank, but I wouldn't say that having local representation is necessarily going to make a difference. With that, I'll pass to Harris&Trotter, who I believe have a particularly unique offering on this point, and let them speak to that.
Thanks, Mark. Yeah, we've got a very good relationship with a tier 1 UK bank and are able to open accounts within 5 working days for foundations and kind of most entities in the world, as long as they're not from sanctioned countries. And I guess this kind of talks to Louie's point about how we've entered this space for kind of those independence issues that we've seen, and also just because we kind of function in a very complete way and can provide services altogether to DAOs that just give it kind of all in one thing. You know, Marc was saying how he's dealing with lots of people and he's too independent, but we can kind of centralize a lot of those things operationally that make things just very much more efficient. So yeah, the bank account side is just one of those things.
Perfect. We have another question from Patrick. Patrick is asking, where is Harris&Trotter located? If onshore, does that pose issues?
Yeah, so we're based in London. We have a team of 50 here. As operators, that does not pose any kind of issue. There are kind of certain things where directors may need to be in Cayman to kind of function and avoid certain things to occur. But as operators, they can be contracted to wherever they are in the world, and it will just be kind of straightforward as that.
Perfect, thank you. So we've answered those 2 questions. I will proceed with the next topic around financing. I saw that Harris&Trotter, you guys, so you also assist with this process. So for all the DAO projects who you would typically work with, what are some of the pain points when it comes to, let's say, the token generation event, and how would you guys be helping with that process?
So in terms of like financing and TGE, I wouldn't necessarily say financing is the hard part. I think kind of financing or funding within crypto is probably the most accessible it's ever been in any market for these kind of early stage projects. What may be difficult is doing it in a structured way that is sustainable and makes sense kind of from a more kind of entity and compliant based perspective. Within TGEs, that's quite simple for us. We would mint tokens on the kind of incorporated area, so the jurisdiction of incorporation of where the token is being minted. That can typically be from Cayman or BVI, and then it will be sent to the foundation in Cayman for the treasury of things. But I think the pain points mostly with how DAOs are working is that it comes back to when they start to interact with things going on outside of the on-chain activity they have. You know, there is also a spectrum of DAOs, so kind of the DAO spectrum, we like to call it, where you can have one function within an organization being managed by a DAO, whether it's their treasury, whether it's kind of, you know, an investment DAO or something, or a DeFi protocol where they are just setting interest rates but not much else. And then the foundation may still be making revenues that do not belong or do not have kind of control by the DAO itself. And that's when it comes into the kind of pain points with governance and how that's structured. So, I mean, there are 3 pillars of governance mostly. You've got property rights, institutions, and rule of law. Academically, they've kind of been considered as pillars and things to get right for economic growth. That dates back centuries. We're not changing anything with crypto. It's just a new way to work digitally. So property rights come from distributed ledger technology. It's very clear what kind of ownership people have over assets digitally. Institutions, these are your protocols. These are where you're putting assets, wherever they are. So, you know, kind of lending or whatever, that's your DeFi kind of area. And then the rule of law. So rule of law would effectively be the DAO, or it would be other people who have influence and can instruct things to occur within that realm. We are not necessarily the rule of law, and we aren't necessarily the institutions. What we do is enable both of those to work when a DAO needs assistance outside of that on-chain activity. And that is the key pain point that we address. Whether that is financing, whether it's kind of working with vendors, those can be market makers, exchanges, legal, etc. We are able to kind of have that role as an operator and leverage our network to make not only just kind of connections, but also negotiate with people and then present those options to a DAO and make all of those things kind of seamless. And yeah, it goes from the bank account side, because we can set up bank accounts very quickly for any kind of entity, all the way through to payment processing, fiat and crypto, everything operational you'd expect, hiring people, to all the kind of fun stuff of financial reporting and bookkeeping too. So yeah, those are the pain points that most people are having in terms of how that function is working between the two. And we are very much the enabler and that kind of bridge between traditional finance and other kind of institutions operating in crypto and the DAO itself, which as a DAO, it's very good at organizing its sole purpose, and it's just about connecting them elsewhere. So yeah, I think that's pretty much kind of an overview of pain points in my view.
I can just add, Umar, from a more of a sequencing perspective, some of the pain points that I've seen. This is more when I was a lawyer and increasingly now as a director. A lot of these onshore companies will issue token warrants or other forms of token investment agreements to investors, quite understandably, as part of their initial fundraising. Once we get closer to TGE, those warrants or other instruments need to be moved across to and fulfilled by the token issuing entity. And so you end up having either a multi-document assignment process or a deed of novation, depending on the governing law of the underlying instrument. And there's a bit of a logistical exercise there in coordinating signatures, getting those documents drafted up, and in some cases, depending on how the project and the deals have moved on since then, some potential retrospective amendments to some of the instruments as well, which it's not necessarily reopening the investments, it's more some mechanical amendments that might be required. So that can sometimes be a bit of a project in and of itself to get to the point pre-TGE where those documents can then be moved over to and fulfilled by the token issuing entity. I think if the founders do not have a very clear list of who has signed what and for how much and when, then they have to go and pull all that information together and collate it and give it to the accountants, to the lawyers, to make sure that all that's properly recorded and moved across. So that can be a bit of a pain point. More pre-TGE. It's not a massive issue if it's not done at TGE, as long as it's done before fulfillment of the token warrants or before they're exercised.
Thanks for sharing, Marc. We have a question from Paul, which I'd just like to take before I proceed with my next topic, which is on, so Paul is asking which jurisdictions are currently being used for token offerings, especially public offerings.
Sure, I can take that one. Hey, Paul, hope all is good with you. So I'll run down the list. In terms of non-public offerings, Cayman foundations can do it. That's airdrops. That is agreements or sales that are not to the public, so they're not advertised, and they're done with private individuals concluded through agreements. Don't quite know where the points that some projects do, which then theoretically might convert into tokens, lands on that, but generally, we use a subsidiary in a jurisdiction where that is lower risk to remove the risk of the foundation potentially conducting a public sale. There's also a debate as to whether engaging market makers to list the token or engaging listing agencies or exchanges themselves through the foundation would be VASP activity. If you want to take a cautious approach, again, you do that through a subsidiary. Subsidiary jurisdictions include BVI, Panama companies, Panama foundations separate to the foundation company are not part of the corporate structure. Switzerland, interestingly, and that more or less is the main jurisdictions that we see at the moment. Panama, BVI, Switzerland. We have seen some issuance done out of Singapore in the past. I'm not sure how viable that would be these days. I do know some other jurisdictions do have registration requirements even for token offerings, which means they are the main jurisdictions that we see. Now you have service providers in each jurisdiction. You do need to ensure that they are involved in that process. You can't just use a corporate service company to spin up a token sub and then hope for the best. Particularly if you're using a professional director or an independent director, they're going to want to make sure that if a particular jurisdiction is chosen, that token issuer has legal counsel or the foundation can engage legal counsel in that jurisdiction to receive advice. It's particularly with the rate of change of regulation in this space and the political climate changing on a fairly regular basis in this space, it's important to ensure that the right service providers are engaged to protect the foundation, its directors, and ultimately the labs team, the founders, and the project and token holders as a whole, now and in the future. So we have to ensure that we've taken all the right steps early, rather than trying to look at that retrospectively and perhaps make some changes when things are done that perhaps shouldn't have been done. Always costs more and takes longer.
Perfect. Thanks for taking that question, Marc. My next topic rather, is on reporting. So I understand the Cayman Islands is attractive for many projects since there's no corporation, capital gains, income withholding, or any other tax on income earned outside of its territory. So I want to ask you first, what are the typical filing requirements annually for this DAO foundation in terms of, so given the tax, there's no levy tax, what would be some of the other filing requirements?
Sure. So let's look at the foundation first, and there's standard legal filing requirements, which are an annual return to the registrar. You'll need to file an economic substance notification as to whether the foundation company is doing any relevant activity for economic substance purposes. If it is, then you have to file an economic substance return, which is a bit more involved. And you also have to make sure that the books and records of the foundation company are kept up to date. That's also very similar for a BVI subsidiary, where not only do you have the annual return and the economic substance notification, you now also have to file a very limited set of financial statements with the registered agent. So it's important to ensure that, especially if you've got a BVI token issuer, that's complied with as well. They're the core requirements, effectively. You then need to look at what the DAO requires for filing and reporting, and I might pass to Harris&Trotter for what they see commonly or on some of the larger DAOs in terms of those filing expectations, and whether that's by the DAO itself or whether it's by a relevant entity in the structure.
Yeah, I think that kind of falls very much on, it depends on how the DAO is operating, or kind of how the users of the DAO and its kind of holders and what their expectations are in terms of that. We're certainly seeing an increase in interest in that financial transparency, and our view clearly is kind of the sooner the better, and the more information out there the better. We are building kind of in-house DAO dashboards to present financial information and further analytics on how a DAO is kind of performing on almost a live basis, is where we're hoping to get to and enable. But yeah, we'd at least kind of expect DAOs to be wanting some kind of monthly reporting to keep up. And then that plays into filing requirements and having financial statements available when it's necessary to kind of submit them to any authority. But yeah, Louis, did you have anything to add?
No, I think that covers it. I think the main two aspects for a DAO are independence and transparency. I think we've covered independence at length. And then with regards to transparency, DAOs are community run. They want everything to be, they should be fully aware of their financial position. That's all of their assets. That's their run rate as well. And as was said, we have a full software development team here at Harris&Trotter that have built in-house a DAO dashboard manager, so you can present that full transparency to the community.
Just to add a little bit of a curveball to this, each company also needs to be classified for FATCA and CRS purposes. And this is particularly relevant where some of these DAO structures use companies that kind of move slowly towards financial institution territory, particularly if they're making investments in other DAOs or making investments generally in respect to their operations. So most of them will generally be passive NFEs or non-financial entities or non-financial foreign entities. But if it starts to get into more investment type activity or starts to hold assets for and on behalf of identified or identifiable people, you then have to look at, does that change the FATCA CRS classification, which then could have reporting obligations. So again, case by case, have these discussions with your legal counsel and make sure all of these bases are covered as part of your paperwork.
One of the follow-up questions I had, so you mentioned that it's very important. So for DAO, what matters is transparency. What are some of the financial metrics that you're working, that you would typically be reporting to the members, or you would be offering in this DAO dashboard that you're currently building? Metrics that are important for DAOs and that would differ, let's say, from traditional companies.
Yeah, I mean, so I guess on
It might
a
be the same thing, but it's just in real time.
It's a similar thing, yeah. The key thing that we are doing with those kind of DAO dashboards, and agree with, it's not necessarily for the foundation in this case. It's kind of how it bridges between almost linking with the actual DAO that's operating in its own right, and not necessarily all of those assets and functions would be within the foundation, but it's creating that collective view for transparency. So it's not just the on-chain data, which, okay, it still needs to be organized with everyone. I think there's been, within the DAO space, the kind of financials are the last thing to be considered, because everyone says, oh, okay, it's on chain. And it's a meme, I guess, to say anything more about it like that. But what we do is take the on-chain data and also merge it with off-chain activity, and bring in kind of any fiat expenditure, understand where other potential liabilities are, and even receivables, and kind of give a clearer picture of things, whether those are contracts and tracking proposals that are upcoming. It's giving that kind of complete picture, but then with the elevated level of financial statements and expertise we can provide there. Also with grant schemes and everything, and kind of those financials, and basically kind of a complete package in that sense.
I'd also add to that, from my own experience, both on the legal side and as a director, we see a segregation between a wallet in the name of the foundation for the foundation's operational expenses. And that would be paying its registered office fees, paying lawyers, paying directors, paying service providers, either that the foundation itself has engaged on the advice of the LabsCo or others, or that the DAO has instructed it to engage. That's a separate wallet. It's ring-fenced, it's accounted for differently to the treasury wallet, whether that's held in the foundation or off-chain and attributed to the foundation, depending on how you look at it. But it's important to make sure that segregation is there as well, in part because I've seen plenty of governance proposals to increase the OPEX budget, and it just makes it much cleaner, because everything that goes into the OPEX wallet is for foundation OPEX. Everything that goes into the treasury, that's for whatever the treasury's allocation and purposes are. So I think that's another important point, and it is something akin to having like a client bank account and an office bank account in a law firm. A similar kind of approach here for the foundation's own use versus that which belongs to the foundation but is to be applied pursuant to the allocation that the community has voted on. And this is where the relationship between the foundation and the community is very unique compared to a typical shareholder company relationship, because the community, the governance token holders, are not shareholders. They don't have certain rights against the foundation company they would do if they held members. They also don't have the same obligations, the same reporting requirements. So I think having that delineation as good practice between finances within the foundation is good, but also ensuring that there are clear and agreed lines of communication between the foundation and its director and governance. So if governance passes the mandate, what is the agreed channel by which the director is notified? Because I can guarantee that I and other directors are not sitting there on the snapshot for a particular DAO hitting refresh every other hour, trying to see if a new proposal's come through. Lots of other ways, and the responsibility does fall on us to be proactive, but there are ways in which that can be streamlined and communicated, especially if you're having layers of counsel or management between the token holders and the operational execution of those governance decisions. I think the more transparency you have on those lines of communication, the better. I also, when I was a lawyer, liked to have DAOs passing recognition proposals for the foundation, making it very clear what the foundation was, what it was going to do, why have the foundation, what its operational budget was going to be initially, based on the known costs and the predicted costs, and then having funding renewal proposals every quarter, 6 months, annually, whatever. And that, again, helps to show that to the community that you have a proper operation here, running it like a real business, because it is ultimately, it's a real business with significant assets, but also taking into account the slightly unique nature of communication and vote and decision making that these operations have, but ensuring that's as smooth and as seamless as possible, as well as being transparent. Obviously, there's certain things, especially emergency decision making, some of that may not be able to be transparent, at least initially, but hopefully there can be some accounting and transparency and reporting after the fact if need be.
There was someone the other day asking me, so we were looking at MakerDAO's financial, which basically the accountants of MakerDAO have built this real-time financials using June analytics. And someone was asking me whether DAOs would typically use a subledger or rather build these analytics dashboard and build these real-time financials rather. Like in your experience, with like Will and Louis, do DAOs typically just use like Subledger to do the accounting, or what's like what are you seeing right now at the moment?
Yeah, so a lot of DAOs are typically using June Analytics or bespoke tailored dashboards that have been made in-house. With regard to like foundations, for example, they'll typically all use crypto subledgers. But yeah, a lot of DAOs will use June Analytics or in-house dashboards.
Perfect. Thanks for sharing. Any other tools that comes to mind that if you'd like to share when it comes to governance?
Well, I guess Snapshot was mentioned, but then other things are kind of just built on chain. So it's directly, I forget the name of there is one quite large one that's does kind of all just is basically a platform to manage kind of on-chain governance and create voting structures where you can choose policies and various kind of voting powers for various stakeholders in a DAO. So, you have on a very rudimentary level, you have a governance token and you hold, a certain percentage, and that's your voting power. And you'd have a quorum, which could even be, it's as low as 4% for some things to pass votes. On a kind of, when you kind of get more sophisticated, you can consider who is providing liquidity into a liquidity pool for kind of these various other kind of activities and initiatives people carry out to contribute to the DAO, but aren't necessarily holding tokens, can also be factored in. And that is what the on-chain data in a way can do, but then you may need to build on top of that because it's not all directly accessible from this information. And that's where you get the complexities that are starting to kind of build out. I think that it just reminded me as well of how kind of ecosystem grants are going as well. Like they are becoming a much more sophisticated idea where DAOs are being able to set up systems where it's no longer just a quick grant and application. Things are, I guess, going down the route of aid in a sense of kind of impact grants and how things are structured to generate value, and also acknowledging that failure is not necessarily the end result of something, and it can actually prove a lot of things to achieve success in the future. So there are a lot of things around the voting processes, whether it's for any kind of DAO activity or on the grant basis and how they are structured to be approved from things, that I think will start to evolve from now after we've had the 2021 bull cycle. And now I think, another reason we're entering now is because we're having these conversations, things are becoming more sophisticated. We are, setting up these legal structures ahead of launching most of the time. We're not playing catch up. We are kind of planning ahead this time around.
It gave me some PTSD there when you talked about trying to play catch up with the structures. Period of time in which we're setting these things up where people already had investors lined up ready to go and they wanted the structure and figure out the governance later. I do think one of the best governance tools now, especially as these projects are becoming increasingly important in the ecosystem, is a good team of advisors initially to, one, work with the founders and the labs team to understand what exactly do they need, what are their key drivers here, what are the key protections they're after, and ensuring that structure that gets built out both onshore and offshore and with the service providers is going to work for what the project needs and where it needs to be. And they're not limited by the service providers. The service providers are enablers. And the good thing about Cayman, and there's plenty of Cayman service providers on this chat, we have a plurality of service providers who have been in the financial services space for decades, building out the infrastructure in the Cayman Islands. That's why it's one of the leading jurisdictions in the world for this. Then you combine that with people like myself who have been in this space since 2017 and have a deep sector knowledge and understanding. I brought that across to law now and bring that across to governance. I'd say to the founders and the projects to be absolutely ruthless when interviewing the service providers from a place of knowledge of what exactly you need. Grill them on experience, on the offering and what the scope is and what the price is and what the timeline of deliverables are. Have a chat about who the other service providers they're going to be working with are as well, because having that joined up approach ensures smooth, efficient, seamless delivery of services. Given how important the projects that we're all involved in and will continue to come through the Cayman Islands are for the adoption of crypto and blockchain and its support in the wider financial services sector and other industries, it's absolutely critical that everyone is held to the highest possible standard. So I'm a big advocate of asking all the hard questions, but making sure that the founders know what questions to ask. And this also means that everyone is operating at such a good level of ability and performance and competence and transparency that the sector as a whole benefits, the jurisdiction benefits, and we're all going to contribute and play our part to building this tech, which frankly we all pivoted to because we saw its potential.
I'm seeing we have 3 minutes left before this workshop ends. I'm not seeing any questions in the chat bar. So if anyone has a question, if you can please write in the chat bar. So meanwhile, I'd like to ask Marc and Louie and Will. So if anyone listening to this workshop right now or later would want to reach out to you guys, what would be the best way to do so?
Probably piano@horizonsglobal.io. I'm also on LinkedIn. Can't miss me with the unusual name and the bald head. And happy to connect and answer any questions.
Perfect. And Will?
Not to us, except I've got quite long hair on LinkedIn. And my email is willeden@Harris&Trotter, or on Telegram it's Eden Graham. So yeah.
Reach out on LinkedIn or email just Louie Hemmings at harrisandtrotter.co.uk, and we'll be happy to help.
Perfect. Thanks a lot for sharing. I'm hearing my echo, but I'm not seeing any questions. So yeah, if we don't have any questions from the audience, perhaps we can already end the workshop just 2 minutes early. Marc, Will, and Louie, thanks a lot today for your time. It was fun for me to learn about the Cayman setup. I didn't know too much about it, and I'm sure the listeners did as well. So thanks a lot, and we'll keep in touch.
Pleasure. Come and visit sometime, but maybe after hurricane season.
All right.
Yeah, thanks for having us, Marc. Cheers,
Thanks
Marc.
for having us. It's me, Marc. Bye-bye.